Kita tengok pada chapter number 4 pula Statement of cash flow. Okay. And then second, the course learning outcome is to distinguish among operating, investing and financing. Okay. Under the statement of cash flow, we have 3 types of activities. Okay. And then there also have a format to prepare the financial cash flow. Okay. Explain, the third one is to explain the impact of the product life cycle on a company's cash flow. Okay, number 4, prepare a statement of cash flow using one of two approach. There have 2 types of approach. Okay, to prepare the cash flow, the first one is indirect method, and also B is direct method. Okay, so we will look at what is direct method and what is indirect method, and then use the statement of cash flow to evaluate a company. Okay, with the cash flow statements, we can know whether the company is efficient or not. Using the cash flow, whether the company is using the resources effectively or not. Okay, so what is the question regarding the statement of cash flow? Okay, where did the cash come from? Okay, what was the cash used for, and what was the change in the cash balance? That is the type of question that we can ask about the cash flow. Okay, so statement is SCF is stand for statement of cash flow, right? SCF stand for statement of cash flow. Okay, by using the cash flow, it helps users. Who is the users? Did you remind? Did you can revise back on acd101? Who is the users of the company? Can you recall that? Or you already forgot? Remember or not? Users. Type of users. How many types of users that we have? Remember or not? Richie? Richard? Joshua, can you remember? Who is the users? Ingat aja. Joshua. Okay. Users, we have 2 types of users. Internal user and also external user. Alright. Internal is the employees that work inside the company. But for external user is someone that outside of the government, outside of the corporation or company. For example, government or financial institution, creditors, that is all the users. Ability to generate future cash flow, okay. Ability to pay dividends and meet obligations. If we have the statement of cash flow, we can know the ability of our company to generate cash flow for the future, okay, whether our company is able to generate cash in the future or not, and whether our company has much cash to pay the dividends. Did you remember dividends? What is this? The dividends is the percentage of money that we must pay to the shareholders. Okay, if you can remember, dividends adalah macam mana saya eja ni? Shareholders. Pay to the shareholders. Okay, the company should have much cash flows, right, in order to pay the shareholders dividends. And then with the statement of cash flow, the company can know the difference between the net earnings and net cash provided by operating activities. Okay. Other than that, investing and financing transaction during the period. Okay, we can identify, okay, how much, okay, the money that we use, the cash that we use to invest in financing, okay, and also operating. Okay. Then let's look at the operating activities. So I want to show you, this is the format for statement of cash flow. There's another one. Hmm, that one is not very detailed. I will search for another format. Hold on, class. No idea. Wait, I will search for you in the Google the more detail for the formats of cash flow. Hold on, okay? I can't find the correct one. So never mind. Later on, I will give you. Okay, let's continue, class. Okay. So let's look at the operating activities. Okay, what is the amount that we must consider that amount is under operating activities. Okay, so operating activities include cash effects of transactions that create revenues and expenses, and also enter into determination of net earnings. Okay, all of the revenues and expenses you should include under operating activities, right? So that is for operating activities. Okay. Balance sheet is equal to non-cash current assets and current liabilities statement of earning items. Okay. For investing activities, it is include the purchasing and disposing of investments and productive long-lived assets using cash and lending money and collecting the loans. Okay, and then investing activities you should include purchasing and disposing. It means that you purchase some of the assets, okay, using the cash. Okay, for example, if you purchase motor vehicle, okay, you should include under investing activities. Okay, and then also lending money and collecting the loans. If you make a loan, okay, from the financial institution, okay, and then you get the cash, right? So the lending the loan is also we put under the investing activities. Okay. Operating activities. What is the difference between operating activities and investing? Operating is regarding the revenues and expenses. Revenues, for example, if you have interest received, okay, and then rent received, that is revenue. Okay. For expenses, for example, if you purchase of goods, okay, and then utilities expenses, salaries, that is expenses. It means that our money is go out from the company. Okay, we expend the money, okay, to get something. That is the expenses. Okay, revenues. It means that we get the money. Okay, and then okay, if you look here for investing operating activities inside the balance sheet or inside the we call it a statement of financial position. Alright, other name for balance sheet is statement of financial position. We already cover on the last semester, okay, on balance statement of financial position. Okay, if you can remember. Okay, we also known as a balance sheet. Alright, so under that, so operating activities is include the non-cash current asset and current liabilities statement of earning items. But for investing activities, it includes under the investment in the balance sheet. It includes under investment and long-term asset items. Okay. For example, if you purchase motor vehicle is our asset. Okay. Long-term asset. Okay. Or we call it as non-current asset. Non-current asset, it means that we use the asset for in a long-term period. Okay, so that's why if we purchase some of the long-term asset or non-current asset, we should put that amount under in the cash flow under investing activity. Okay, you must remember in the cash flow statement we only record amount that we use for cash only. Okay, cash or cash equivalent. Okay, kita akan includekan semua aktiviti investing, operating menggunakan apa, kita akan record hanya bila kita mengeluarkan atau menerima duit secara cash. Okay, that's why nama dia adalah cash flow statement. Right, kita nak tengok. Okay, you can determine from the cash flow statement dekat mana duit kita banyak keluar, dekat mana duit kita yang banyak masuk. Okay, duit tunai tu. Okay, that cash flow. Okay, so the third one is financing activities. Alright. Okay, what is the difference between operating and also investing? If financing activities include obtaining cash from issuing debt and repaying the amount borrowed and obtaining cash from shareholders and paying them dividends. Okay, so that is the financing activities. Okay, how much that we get the cash from the shareholders. Okay, how much is we lend or we borrow the money from the financial institution. Okay, so we must include under the financing activities. Okay, so in the balance sheet is equal to the long-term liabilities and shareholders equity items. Okay, you must remember long-term liabilities such as loan from banks. Okay, so we obtain the cash from loan from bank. Later on, we must pay back the debt. Okay, that is called financing. Alright, the same goes to shareholders equity items. Okay, how much is your share that you sold to the shareholders? And then, okay, if you remember, in the company, if we issue share to the shareholders, it means that the shareholders should give us or should give the company amount of money or capital, okay, that used to operate the company. Alright, so that the percentage of the company ataupun pemilikan tu akan menjadi milik shareholders. Okay, so that the shareholders will own that company. Okay, so that's why under financing it is include the cash we got from the debt such as loan from bank. Okay, and then also cash from the shareholders. Okay, and then money from equity share or capital. Okay, that is the three things, okay, that you must know. The first one is operating activities. Second one is investing. Okay, operating activities regarding revenue and expenses. Okay, investing regarding the assets that we buy, non-current assets or long-term assets. Then the third one is financing. Okay, from where we got the cash. Okay, one from loan and then from equity. Okay, so let's look at the significant non-cash activities. If it does not affect cash, do not report in body of the statement of cash flows. Okay, so that's why I told you that in the cash flow statement we only include all the cash activities. Okay, not non-cash activities. Okay, report in separate notes or supplementary schedule for the financial statement. Okay, do not put the non-cash activities inside the cash flow statement. Right? So this is the format of statement of cash flow. Okay, cash flow from the three activities, that is operating activities, investing activities, and financing, constitute the general format of SCR. Okay, the first one, you should have the title, company's name, and then write on the second line of the title is the statement of cash flows, and then the third line is for the period cover. For example, as at 31st December 2021. Okay, something like that. Okay, and then first we should open three columns here. Okay, the first one is for the details, and then the second and third column is for the amount. All right, RM. Okay, and then cash flow. Okay, the first item is cash flow from operating activities. Okay, list of individual items, and then we get the net cash provided or used by operating activities. Okay, you must determine whether that amount, okay, we got the amount or we must spend that amount. Okay, and then if we must spend the amount, we should plus, and then if we got the amount, we must minus. Okay, so that is the format here, and then the second item is for cash flow from investing activities, and then the third one is cash flow from financing activities, and then we must uh, put the net increase or decrease in cash, whether we got the negative, that is decrease. Okay, if we got the positive amount, that is increase. Okay, net increase in cash, and then we must what we call that, differentiate. Okay, compare the cash that cash increase or decrease on the current period. We compare with the cash at the beginning of the period, and then we will get the cash at the end of the period. Alright? So next, let's look at the product life cycle. Okay, what is the product life cycle? Okay, for what that we must know the product life cycle, what is the relationship between the product life cycle and also the cash flow statement. So the product life cycle is, we have how many phases? 4 phases, alright, in the product life cycle. The first one is introductory phase, second is growth phase, and the third one is maturity phase, and the fourth one is decline phase. Okay, the phase a company is in effect is cash flow. Okay, so in the product life cycle, there is a relationship between product and also cash flows of the company. Okay, so let's look more further. Okay, this is the impact of product life cycle on cash flows. Okay, so you have four phase here. On the one x-axis is for the phase. The first introductory, second growth, third maturity, and the fourth is decline. So the x-axis, the y-axis is referring to the cash flow, right? So we look here. When the product is only uh, starting, okay, just starting, the product is just starting, so that you will see, okay, this this is the red line is for financing activities, okay. The blue one is for operating activities, and then the green one is for investing. Operating and investing activities. So you look here, okay, if in the phase of introductory, okay, our cash flow is negative, okay, okay, until when the product is growing, okay, and also matured, so our cash flow is getting better, and we got the positive cash flow, right? Look here, positive cash flow increasing. Okay, our cash flow start from growth phase until maturity phase. Our cash flow, okay, increasing. Why? Because we can sell our product, okay, and then many customers can buy our product, so we can get many. We can um, what we call it, can produce more, and then can sold more to the customer, so that's why we got many sales. Okay, income, we can generate many income when we buy with when we sold the product itself, right? So that's in under the growth and maturity, our cash flow will start positive, our cash flow is increasing. But then operating and investing, and look at operating and investing. But when the product is declined under the decline phase, so our cash flow is decreasing. Look here, our cash flow, our money is decreasing. Okay, our money for operating and also investing activities is decreasing. Okay, but that is the different things with the financing. Okay, financing, it means that we buy some asset, okay, that used to produce that product. For example, on introductory phase, okay, we must have, for example, if you want to open the manufacturing company, um, for example, to make a car, okay, to produce a car, so that we must finance, we must have the financing, okay, we must have the money from loan from the financial institution or from equity, right? So then our cash flow is positive, but then our financing cash flow negative, decreasing. Okay, if our product is on the decline, okay, decline phase. Okay, for example, if we start for the financing, if we start um, to create or to build a new car, and then that car on the first phase introductory, also our financing is positive, high cash flow, and then but throughout the phase, and then the company decide to stop process that product, so that our financing will go decline, and then the cash flow for that financing the product is negative. Okay, that is the difference between the financing, operating and investing activities and impact of the product life cycle on the cash flows, right? So we must identify first, okay, which of the activities, okay, there is a difference between the activities and also cash flow that impact on the phase of the product life cycle. Okay, what is the first step in preparing the SCF? Is first one, determine the net increase or decrease in cash. Okay, we must know the difference between, okay, what is the net increase or decrease in cash. Okay, we must identify the difference between the beginning and ending cash balance can be easily computed from comparative balance sheet. Okay, we must compare in the balance sheet. Okay, what is the opening balance? Okay, that is the beginning balance, and compare opening balance and also closing balance of the cash. Okay, so that is the first step. Okay, so how can we define the cash? Okay, so in the cash flow statement, we have cash and also the things that cash equivalent. Okay, that's the difference between the cash. The cash equivalent is some like cash, but that is not a cash. Okay, that we call it as the cash equivalent. Okay, so the cash can include cash equivalent can include cash plus short-term investment. Okay, so look here, cash plus short-term investment minus with short-term borrowing. Okay, short-term investment, amount of money that we invest, and short-term borrowings, amount money that we borrow from outsiders. Okay, so can include the cash is include cash plus short-term investment. Short-term is mean short period. Okay, we just invest in the portfolio, or we just invest on the bank institution, financial institution for the short term period. Okay, that we call short term investment. But then for borrowing, okay, we borrow money from the financial institution. Okay, short term also we call it as short period. Okay, for example, short period or short term, less than Maybe we just invest or just borrow the money less than 1 year, for example. That is a short term. If we buy or we borrow or we invest on a long term period, we call it actually long term period is more than half 1 year. We consider as a long term period. Okay, that is the difference between short term and also long term. It is important to define the cash. Okay, so you must know, okay, the cash also include the short term investment minus with the short term borrowing. Okay, next, preparation of the operating activity section. Okay, actually, if you look at the SOPL, Statement of Profit and Loss, that we cover on the last semester, and also Statement of Financial Position, all of the things that we use and we put inside the elements of the financial statement, we use accrual basis. Accrual basis, it means that we must record, okay, we must record the amount, even though, okay, record the amount or transaction even though the company did not receive or pay that amount yet. Okay, but for cash basis, okay, that is a different. Accrual basis and cash basis is two different things. Okay, SOFP and ataupun or balance sheet and also net profit statement of profit and loss. Okay, we use accrual basis. Okay, even though the transaction we did not get the money yet or we did not pay the expenses yet, but then because of the accounting period we should record, okay, in the SOFP and also SOPL. But for statement of cash flow, we just use the cash basis only. Okay, whatsoever the amount, okay, that we use or that we get from operating activity section, we must put under the statement of cash flow, so that the net earnings that we get from SOPL and SOFP, we must convert from accrual basis to a cash basis. Okay, how that how come that we can convert into the cash basis? There have two types, two methods that we can use in order to convert, okay, from the accrual basis under SOPL and SOP into the cash basis. Okay, are you following me, class? Hello, are you following me? All right, very good. So let's continue. Okay, there are two types of methods to prepare the cash flow statements. Okay, the first one is indirect. The second one is direct method. Okay, indirect and also direct method. There is a difference between two methods here. Okay, so how? Okay, indirect and direct methods. Okay, both methods arrive at the same total amount. Okay, of course. All arrive at the same total amount of cash provided or used by operating activities. But instead of the different, just the what we call is the format itself. Okay. At the end, the amount should be the same, whether we use method indirect or direct. Okay. But then the display or the details there is some difference. Okay. But at the end, we should arrive at the same amount, whether we use indirect or direct method. So that's why they said here both methods arrive at the same total amount of cash provided by operating activities. Nanti akhir sekali tu dia akan jadi sama saja. Okay, cash provided used by operating tu hasil yang last sekali, dia akan jadi sama saja amount dia walaupun kita guna direct ataupun indirect. Okay. Methods differ in disclosing. Dia punya perbezaan dia adalah disclosing the items. Ni ada details or the items that make up the total amount. Okay. How can we arrive at this? For example, if we got the indirect, we got the cash provided, for example, 1,500. So if we use direct methods, we should also got the same amount, that is 1,500. So the difference is just how we choose whether indirect or direct. The item that we disclose under the indirect and direct, that is the difference between it. Okay. So but the total amount at the end should be the same. Okay. Something like that. Oops. Terlajak pula. Okay, then the choice of methods affects only the operating activity section. Okay, the investing and financing activity sections are the same. So in the CS cash flow statement, CFS statement of cash flow sama saja. Okay. So the difference between it is just in the operating activities only. Okay, the amount that we display under that. The two method is different. But then under the financing and also investing, there is no difference between direct and indirect. Okay, same things only. Okay, so let's look at indirect method. Okay, indirect method used extensively in practice. Most companies favor the indirect method for the following reason: easier to prepare, focus on the difference between net earning and net cash flow from operating activities, reveal less company information to competitors. That's why most of the company love to use indirect methods. Okay, less company information, because you must understand that each of the company, okay, big company usually must have statement of financial position, statement of profit and loss, third one statement of cash flow. Okay, the three things here, everyone, okay, each of the company should have the website, right? Okay, the big company usually have the website, and then under their website, okay, include all the information, include these three things: statement of financial position, statement of profit and loss, and also statement of cash flow. So all these things uh, we can easily get the information under the website of the company. So that they said here, okay, most of the company love to use indirect method because reveal less company information to competitors. Okay, competitors, that is rivals or competitors or rival. Okay, rival in the business, because most of the company, maybe there are some products. Okay, they produce the same product or they sell the same product. So that indirect method will less reveal the company information. Okay, so but for the direct method, most of some of the company in Canada, like Canada in the Chartered Institute, prefers the direct method but love to use the indirect method. Details, cash receipt and payment easier to understand. Okay. So let's look at how we calculate the operating activities under indirect method. Okay, step number 2, determine the net cash provided by operating. Okay, so what is the activities included under operating? Buying and selling goods. This step involves analyzing not only the current year statement of earning, but also comparative balance sheet and selected additional data. Okay. Okay, this is the net earnings and also net earnings to net cash provided by operating activities. Okay, net accrual basis of accounting, we have the net earnings, that is earned revenue, and also expenses that incurred, so that we get the net. Okay, we have the revenue, and then also less with revenue under accrual basis minus with expenses incurred, we got the net earnings. But for under the cash basis, we eliminate non-cash revenue. Okay. Adjustment to reconcile net earnings to net cash provided by operation. Okay. So eliminate the non-cash so that we will get the net cash provided by operating activities. Okay. So net earnings to net cash provided by operating activities. Statement of cash flow, right? Prepared by the indirect method starts with net earnings and adds on or deducts item not affecting cash to arrive at the net cash provided by operating activities. Okay? For example, changes in specific non-cash current asset and current liabilities, and also non-cash items reported in the statement, changes in specific non-cash current asset and current liabilities, and also non-cash items reported in the statement of earnings. Okay, that is the item, okay, under indirect method. Okay, so let's continue. Okay. What is the net non-cash current asset and current liabilities? So here, adjustment to convert net earnings to net cash provided by operating activities. Okay, if the change in the current asset account balance, if the account receivable, okay, we look at the, okay, this is the 1, 2, 3, 4. Okay, in the current asset, did you remember what is the current asset? How many types of current asset that we have? Cash, bank, okay, we have inventory, and also account receivable. Okay, we also have the prepaid expenses. Okay, we have one cash. Inside the current asset, we have cash, bank, inventory, account receivable, and also some 5 prepaid expenses. Okay. So cash and bank, it doesn't matter at all because this is the cash item. Okay. The non-cash item here, account receivable. Account receivable is the person that owe to your company. Account receivable, we call it as account receivable. Inventory is the product or the goods, okay, that we purchase and then we buy back, we sold back to the customer. That is inventory. All right, in terms of goods, in terms of asset inventory. So that is non-cash activity, the non-cash item. So that's why this for non-item we should convert to the net earning, net cash by using, okay, if there is a difference, if there is a decrease on the account receivable, if we compare to other years, so that you must add on. But when the account receivable is increase, you must deduct. Okay, same goes to inventories. Prepaid expenses. Prepaid expenses means that we already paid earlier. Okay, we paid the expenses earlier. That is prepaid expenses. Expenses paid earlier in advance. Okay, this is the item that is non-cash item. Okay, so we just record the amount. Okay, the difference because uh, why prepaid expenses is appear under the current asset because of, okay, we have already paid that expenses in advance, so that we did not want this thing or this item under that accounting period. Okay, so that's why we put under the current asset. Yeah, expenses paid in advance. So prepaid expenses is an item non-cash, so that's why we must adjust here to convert net earnings to net cash. Okay, so and also we have other current assets. Okay, for example, prepaid expenses. No, that is liability. Current prepaid expenses paid in advance, and also accrued revenue. Okay, so accrued revenue. Okay, other current asset we call it as accrued revenue. What is accrued revenue? Accrued revenue amount that we, okay, the revenue of the things that we did not get yet. Okay, that is accrued revenue. Supposedly we should got that revenue on that accounting period, right? But then we did not receive yet on that accounting period. So that revenue we considered under a current asset because of, okay, under accrued revenue under current asset in the statement of financial position. Okay, but then in operating activities for statement of cash flow here, okay, this other current asset we also should adjust, okay, in order for you to get the net cash, not net earnings. Okay, so that if there is a decrease on the accrued revenue, you must add on, okay, in the uh, statement of cash flow. If there is an increase of accrued revenue, okay, you should deduct that increases. Okay, that increment you should deduct. And then let's look at the changes in current liability account balance. Okay, there is also some item, okay, under the current liabilities that is not cash basis, that is non-cash. Okay, the first one is account payable. The second one, accrued expenses. Okay, the third one, other current liabilities is that is accrued expenses. Okay. Prepaid revenue. Okay. What is prepaid revenue means? Okay, prepaid revenue it means that we already received the revenue in advance. Okay, we already received the revenue in advance. That's why we call it as a prepaid revenue. So that's why under SOFP, okay, on accrual basis, okay, you must remember accrual basis is under uh, when we prepare the SOFP accrual basis, but for statement of cash flow, that is cash basis. So these these three items that we should convert. Okay, so look here. The difference between the changes in current asset and also current liability is when there is a changes between the non-cash here, account payable, accrued, and other current liabilities. Okay, when the amount is increased, you should add. Okay, between current asset and current liability, there is a proportionate direction here. Okay, so current liabilities, there is a changes, you should increase and add on. But for when the changes is decreased, you should deduct that amount. Okay, the difference you should deduct. Okay, look here, add or deduct change in account balance to net interest. Okay, this is indirect methods. Okay, non-cash current asset and current liabilities. So that you must remember there is a non-cash under current asset and also current liabilities. What is it? Account receivable, inventory, prepaid expenses, and accrued revenue is the non-cash under the current asset. What next? For the current liabilities, there is also the non-cash items, that is account payable. Who is account payable? Can you remember? Who remember? Risha, Rishi, or Joshua? Can you remember who is the account payable? Can you remember or not? Joshua? You ingat tak? Tak ingat. Management accounting ni dia macam susah sikit tau. Kalau compare kepada Apa tu? Accounting, financial accounting dia lebih senang. Okay, management accounting, inilah yang kita kena belajar. Okay, cash flow kena belajar. Account payable ni, okay, outsiders that owe to the company. Owe money to company. No. Sorry. Account payables, the company owe. Company owe to them. Okay, account receivable, outsiders, and outsiders should be the customer, okay, that owe to the company. That's why we put under the current asset. But for current account payable is current liabilities. It means that we have some obligation to pay that account payable. But for account receivable, that account receivable has obligation to pay to us, to pay to the customer, to pay to the company itself. Okay, that is the difference between current asset and also current liability. Okay, ada lagi tak? Ada lagi. Okay. Adjustment to convert net earnings to net cash provided by operating activities. Okay, tengok apa lagi yang ada dekat dalam statement of earnings ni, statement of profit and loss. That is the same things, okay. Tadi kita dah tengok yang ada dekat balance sheet, iaitu current asset dengan current liabilities. But then let's look at the earnings pula. SOPL, apa lagi non-cash item yang ada, iaitu contohnya amortization of capital asset expenses. Okay, kalau kita ada bayar expenses, kita kena add on. Then kita dah belajar ni kan, bond discount tu semua tu, bond premium. Ini semua adalah interest expenses. Interest dia masuk dalam, that is the expenses actually, amortized of bond discount, amortized of bond premium on chapter 3, we cover that. Okay, so kalau we have the bond discount, we must add on. But when we have the bond premium, you should deduct. Okay, and then loss on sales of asset. If there is some asset, okay, long-term asset or non-current asset, okay, that the company did not use, so that the asset is sold to the other parties. So if there is a loss on the sale of the asset, so we must add on. Okay, and then if there is a gain, you should deduct. Okay, what else? When there is an income from long-term equity investment, so if you notice here, okay, if there is expense, you should add on. This is an expense. But if there is a revenue, so bond premium interest is revenue, so you must deduct. Loss, add on. Gain is revenue, deduct. Then income is revenue, so deduct. So what is the item is revenue, you should deduct. Okay, non-cash item in the SOPL. Okay, when there is a revenue, you should deduct when there is a revenue. When there is a set expenses, you should add on. Okay? Okay, so let's look at the indirect method settled format. So there is a net earning from the operating activities 139. This is we got from the additional information or information that provided by the question. And then here expense. When there is an expense, you should add on. If there is an expense, you should add on. There is a decrease in account receivable, you should add on. When there is an increase in the prepaid expenses, you should deduct, okay? And then there is increase and accrued expenses, you should add on. So, how can you identify here? You should look at the format here. Where there is a decrease, you must add on. Where there is increase, you deduct. Okay? Look at this. We call it as the formula. Okay? If you want to prepare the statement of cash flow, okay, if you do not understand, so you look at the formula there in order for you to understand whether that item you should add on or you should deduct. Okay? So then 139,000 times with 15 times add on with 15,000, then times with 3,000 times add on with 10,000 and then minus 4,000 and then add on with 55,000, so you get 79,000. So you add and then less 4,000, so you will get 218,000. That is the net cash provided by operating activities. Okay, so after you do this, so that you will arrive on the amount of cash only in the operating activity. Okay, that is the formula. So look at the operating activities for direct method. So I think let's continue tomorrow. Okay, operating activities for direct method. Is that okay, class? Continue tomorrow? Alright, okay. So I already record for you. So you can look back and revise by your own. Look at my recording. Okay, so thank you so much for today. Let's continue tomorrow. Okay, bye. Thank you, class. You're welcome. Bye. You're welcome. You're welcome. Bye.